Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Markets are showing extreme fear and institutional capitulation signals as Bitcoin ETFs record historic outflows, while Grayscale launches two new spot crypto products today. Bitcoin is trading at $86,217 this morning after testing lows near $80,000 over the weekend. The cryptocurrency has declined over 30% from its October peak of $126,000, putting November on track as the worst month since February. Spot Bitcoin ETF outflows have reached $3.55 billion since the beginning of the month, nearly matching February's record of $3.56 billion. BlackRock's IBIT led last week's redemptions with $8 billion in trading volume on Friday alone, as weighted average ETF holder entry prices exceed $90,000 according to NYSE Research. The options market is telling a bearish story. On Deribit, the $80,000 put option has become the most popular trade with $2 billion in open interest, surpassing the $85,000 put and the previously dominant $140,000 call. This represents a complete sentiment reversal over just 1 week as traders position for further downside. NYDIG Research warns that mechanical factors, not just sentiment, are driving the decline. Greg Cipollaro identifies actual capital flight as spot ETF flows reverse, stablecoin supply contracts for the first time in months, and digital asset treasury share premiums flip to discounts. Companies like Sequans are now selling Bitcoin to reduce debt instead of issuing stock to buy more, reversing the corporate treasury strategy that once fueled demand. On the regulatory front, Grayscale launched its Dogecoin Trust ETF, ticker GDOG, and XRP Trust ETF, ticker GXRP, on NYSE Arca today. Dogecoin is trading at 14.5 cents, up over 3%, outperforming the broader market despite ongoing weakness. XRP sits at $2.06. Central bank tensions are rising over stablecoins. The Bank for International Settlements, Dutch National Bank, and Reserve Bank of Australia warn that rapid stablecoin growth could trigger mass redemptions and force fire sales of US Treasury bonds, potentially requiring government bailouts. Federal Reserve Governor Stephen Moran and Coinbase Chief Policy Officer Faryar Shirzad counter that full reserve stablecoins are fundamentally safer than traditional fractional reserve banking. Cardano experienced a temporary chain split on Saturday when an attacker exploited a known bug using an AI-generated script. The incident prompted emergency patches and sent ADA down over 6%, though no user funds were lost. Charles Hoskinson characterized it as a targeted attack by a disgruntled stake pool operator. In debanking news, JPMorgan Chase closed Strike CEO Jack Mallers' accounts in September, citing concerning activity without providing specifics. This reignites concerns about Operation Chokepoint 2.0 despite President Trump's August executive order prohibiting crypto-related debanking. Looking ahead, the Fear and Greed Index stands at 12 out of 100, signaling extreme fear. Bitcoin must reclaim the $90,000 range to inspire confidence, while a drop to $81,000 could trigger broader panic selling. The Federal Reserve's December 10th rate decision and the end of quantitative tightening on December 1st remain pivotal catalysts. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.